Okay, Aditya, are we good to start? Because I am ready if you are. Vijay, good to go?
I'm good to go.
All right.
All right.
Thank you very much, Aditya, and thank you everyone for joining in. You know, today is Friday the 13th, and for non-believers, we got some evidence of why Friday the 13th is such a dreaded day in how the markets began today's session and how they ended it. So, it was a roller coaster ride for everyone, including Vijay. I'm sure he'll agree. Now, that said, right, there is no denying that we are living in very uncertain times with every single market really doing what it wants to, right? So, what we've seen all through this year is that traditional correlations have weakened. Some very popular correlations have completely disappeared, and really volatility has gone through the roof. Now, I know people love volatility because that's when you get trending moves and you can make some, good amount of money in quick time if you're on the right side of the markets. And you know what? Other than Donald Trump to get a second term and fan volatility like only he can. I was just telling Vijay that now he has Elon Musk for company. The next 4 years are going to be more exciting. Are we good to start? Because so I am ready if you are. Think about it. Vijay, good to go. Happened, this year. What are some of the dominant themes that are that continue to dominate headlines, right? So one of them that I can, easily think of is geopolitics and everything that's unraveling on the geopolitical front. And the other is inflation, of course. I mean, inflation is one word that I think has been heard at least 1 million times in the last 3 years, ever since the Fed, said inflation is transitory. I think that was in 2021. We all know how that ended. But given that these two themes have really dominated headlines, I couldn't have thought of anyone better than our good friend Vijay Bhamwani to come and talk to us and really give us a world view on the present situation and what is most likely to happen as we finish off what has been a very interesting 2024 and get ready to welcome 2025. Now, to make some quick introductions, Vijay is a seasoned expert with over 38 years of experience in the financial markets. He's the founder and promoter of Bhamwani Securities Private Limited, a leading proprietary trading firm. His journey in financial markets began in 1986, and over the years, he's gained unparalleled expertise in equities, commodities, and foreign exchange. Now, Vijay has also written over 2,000 plus articles for some of India's most respected financial publications, including Business Standard, DNA Money, Bloomberg, and Reuters. He has also been an influential voice in electronic media, having appeared on major platforms like CNBC TV 18, BBC, NDTV, Z Business, Al Jazeera, and the list goes on, having contributed to more than 8,000 online shows. But that's not all. Vijay is also a visiting guest faculty at institutions such as the BSc Training Institute, the NSC Training Academy, and University. He's trained market professionals both in India and overseas. He's a pioneer in teaching behavioral technical analysis and statistical trading models, offering a very unique perspective to understanding financial markets. Having said that, we are very, very thrilled to have Vijay with us today. Please join me and everybody else at Axis Securities in welcoming him to the webinar. With that out of the way, let's dive straight into it. Vijay, once again, a big welcome from all of us. You have a couple of things to say it now, and then we're going to just dive right in.
Well, Akshay, thank you for having me on this wonderful platform. The pleasure and privilege is all mine to address this audience here and share my thoughts on the subject that I'm very passionate about. And these markets have now become a part of my DNA. It goes beyond earning bread and butter or putting food on the table. It's like breathing. So when you offered me this opportunity to appear on the platform, I would have given a right arm and a leg to be here. So thank you very much for having me over.
Thank you so much, Vijay. Very kind of you to say that. So I think, we've got about 55 minutes on the clock. And I'm sure this is going to make for a very, very interesting discussion because I have some tough questions for you. And like I said before, I couldn't have thought of anyone better to take these questions, as they come. And I'm sure our viewers are also going to be Very impressed with the kind of knowledge that you have to share with us today. So, having said that, let's just go into the first thing that I want to really get your perspective on, Vijay. With the new US administration and Donald Trump is expected to take oath for a second term come the 20th of January, do you see any major policy changes with respect to things like, tariffs and corporate tax cuts? And therefore, if you think, these things are around the corner and that they're coming, what could be, the possible impact on the US and the global economy as a whole? Because I think the whole punchline during the first term for Trump was "Make America Great Again." Is he going to continue with that theme? And how do you think that's going to affect the rest of the world as we know it?
Well, Akshay, I'll try and answer these questions to the best of my ability, and please feel free to correct me in case I suffer from any missteps. So, where Trump 1.0 and Trump 2.0 are concerned, I think Trump 2.0 is likely to be a continuation of Trump 1.0. Make America Great Again is likely to be the chosen standard operating procedure that President Trump will follow. He will try and put more money in the hands of an average US citizen. Take, for example, his recent statements, cutting taxes on overtime, cutting taxes on tips, all right, cutting taxes on social security benefits. Now, these are all noises in the right direction. For example, his tax act called the Tax Cuts and Jobs Act of 2017. It is widely expected by friends and family members who I have in the US, and I confer with them every weekend. They tell me that it is quite likely that he will continue that path. And corporate tax, if my memory serves me right, is currently at 21% in the United States. If at all a symbolic cut is announced, it could go down from 21% to 20%. But if at all he goes the whole hog, there exists the possibility that the tax could go down all the way to 15%. Now, whether he will be able to sustain that kind of a fiscal deficit, time will tell, because let's not forget the US is now at record levels of deficits and debt. I mean, they're going to be paying more than $1 trillion next year onwards in servicing that debt itself. So, making all the right noises, of course, I would put a tick mark there on my checklist. But walking the talk is not going to be half as easy as people believe. Having said that, being a business owner, I have no doubts that he'll try and be a good facilitator for business improvement and basically enabler of corporate America.
Yeah, I kind of share the same thoughts. I mean, in the discussions that I've been having with my group of friends and well-wishers, I think they're doing exactly the same thoughts that you highlighted, right? I mean, his resolve is going to be as strong, if not more, compared to what it was in term one, and he's going to experiment with things that will make the lives of average Americans better. How that's going to play out in terms of the deficit and the fiscal situation remains to be seen. Now, with that out of the way, my next question, and it's something that a lot of people are thinking about, like it happened during the first term. Do you think these new policies have it in them to create some sort of a global trade war? Because these fears, kind of, I think, first sprung up during the first term, but they seem to be recurring. Is there merit to think a trade war sort of a scenario can actually come to fruition?
I think a probability exists that at least a confrontationist saber rattling, extreme amount of saber rattling is likely. And financial markets are, I mean, we call ourselves market warriors. But believe me, we are not soldiers, right? So markets tend to take this kind of saber rattling extremely nervously. So there is a possibility that nerves will get rattled as both sides start to basically up the ante, so to say, and rhetoric is likely to be fairly high. Now, what I expect President Trump to do was he may not be able to immediately impose tariffs like he's been saying.
Yeah.
Do remember, he's a politician along with a business owner. He knows one thing. If he was to suddenly clamp down tariffs of say 100%, for example, like he's been talking about,
Correct.
does the minimum wage in America make it possible to manufacture goods and services as cheap as the Chinese are providing to an average American? If
I'd really
not,
doubt that. Yeah.
if not, then you're forcing an average American to buy the same stuff that the Chinese were providing at $1. You're forcing him to buy at $3, which means pushing inflation up again,
Correct.
right? So I think, speeches apart, it would be more sensible for him, and which I suspect he will do, is sit across the table and say, let's have a quid pro quo. You buy my stuff, I'm going to buy yours. How are you going to do this? Right? So it's more of trade arrangements, renegotiating trade arrangements rather than a trade war is what I would expect, but I could be resorting to wishful thinking. One thing I'm very sure about is, compared to President Joe Biden, Trump's policy is likely to be a lot more assertive and a lot more muscular.
Undoubtedly. One of the I think it's a good point to talk about gold. I know you've been a fan for a long time because I follow your work very closely. You've been very vocal about why the last couple of years have been a great time to be owning gold, and we've seen what gold prices have done. In fact, in my introduction, I remarked that some correlations that have held for so long are starting to thin out, and the gold dollar correlation seems to be one of them. Maybe just for this year, but we can clearly see that there have been days when both the dollar and gold have gone up, or there have been days where both have moved on the downside. This year there was some chatter about a few months ago, maybe 3 months ago, saying gold prices in US dollars are likely to hit that magical $3,000 mark. We came within a whisker. Now we are kind of ranging for a bit, but with the US elections now behind us, do you remain as sanguine on the prospects for gold going to 3,000 and probably heading much higher?
Akshay, what normally happens, like you said, correlations have got smashed in the recent past. What used to happen earlier was, in the run up to the election, what we call the US presidential cycle, right? Every 4 years, equity markets used to get pushed up. Crude oil and natural gas were brought down. This is to curb inflation and get brownie points with the voters.
Yeah.
Gold and silver prices used to be artificially subdued. It's an open secret, which is why allocation to from gold used to move towards equity. And if the stock market is going up, it is treated as if corporate America is doing well.
Correct.
Right? But this time around, I saw gold prices jump ahead of the US elections. Now, what has changed between Trump 1.0 and Trump 2.0? Look, there's been a whole lot of rampant unbacked currency printing, especially after COVID lockdowns. So, number one, there's been a debasement of fiat currency. So, the purchasing power of every currency, forget about the dollar, every currency has gone down.
Yeah.
Secondly, what you have seen is inflation has gone up significantly. And the worst kind of inflation that I think mankind can encounter is food inflation. The shirt that I'm wearing, if it was to become more expensive, I would start doing what the average Argentine is doing.
Yeah.
In Argentina, the market for second-hand clothes is a lot more vibrant than new clothes. So I'll go out and buy a second-hand shirt and say, if I can't afford a new shirt. What do I do about food? I can't eat stale food.
Yeah.
So food demand tends to be inelastic. It tends to be non-negotiable. And if you go to the United Nations Food and Agricultural Organization's website, FAO.org, you'll be alarmed. Food inflation is hitting record highs. And in some countries, where supply chains are kind of suffering, it could go as high as 30%. You're looking at a huge humanitarian problem. So money will need a place to hide, safe haven buying. I'm quite sure that gold will do well. And if you allow me, I'll talk about a non-traded securities aspect of investments. If you
Sure.
go to the website of auctioneers, global auctioneers, like say
Hmm.
Christie's,
Hmm.
you see the price of antiques, vintage stuff, and it's unbelievable. Money is also flowing into alternate asset classes.
That is correct. Yes.
So, am I saying that these items are going to be traded? No, they're probably going to be hidden in a cellar somewhere. But what it
Correct.
does tell me as a behavioral technical analyst is that there is fear. And then when there is fear, I think gold tends to do well.
Yeah. At least there is evidence over a really long period of time that proves so.
That's
Uh,
right. That's right.
you mentioned food inflation. I have a follow up question to that. So one of the things a lot of people are saying is, a December rate cut. I think the Fed meets next week is a given. Expectations are for the Fed to move lower by 25 basis points again. But there is one, school of thought that thinks the Fed will have very little leeway next year to be as aggressive with their rate cuts if they were to come. And one of the things that these people quote, that is going to lead to maybe a second wave of inflation is food inflation, right? Because of the points that you just made. Do you think that can be a reasonable catalyst for us to see like a second wave higher?
Akshay, I have somewhat different thoughts on coupon rates, interest rates, as compared to a classic textbook knowledge that we've all been imparted in school and college.
Yes.
You know, we are taught that lower interest rates boost the economy,
Yeah.
which to a certain degree is right. It facilitates a borrower to go out there and spend money on a credit card, buy a shirt, a watch, or a pair of jeans, and spur consumption. But in double entry system of account keeping, every debit must match a credit.
Correct.
So for every borrower, you need a saver. I call them check writers.
Yeah.
Okay.
Correct.
So unless a guy writes out a check and puts money in the bank can't really lend.
Correct.
Okay. Now, what we are taught is that lower rates help the economy, the GDP. Have you asked a check writer whether he's happy with lower coupon rate? Okay.
Answer is going to be no.
The answer is going to be no. And for many, many years, especially after 9/11 happened, you've been basically giving them abysmal and in some countries negative inflation adjusted coupon rates.
That's correct.
So far, he said, okay, I'm not making much money or maybe even losing money in real inflation adjusted terms by saving in the fixed income market. So I'm going to take this money out, put it in the stock market.
Can I come in there, Vijay? Was that primarily because return of capital became more important than return on capital?
Exactly so. Exactly so. So look at Denmark. When Denmark went out there and started charging quarter percent on fixed deposits, because they wanted banks to go out there and start lending to businesses.
Yeah.
They were surprised to see people actually putting in money in fixed deposits at 99.75% return. I mean, a minus 0.25% return.
Correct.
Why? Let's talk about the German bond yield. For many, many years, the 7 year German bond yield was negative. Why were people investing in German bonds? He said, okay, I don't know whether I'm going to live this long. Maybe I should leave this wealth for my next generation. At
Understood.
least return of capital is guaranteed. This was absolute fear mongering, of course, but these things do happen. So
Mm.
I think what we are ignoring is the check writer. And if at all we think equity markets are going to give us lower rates of return on our capital, then you need to compensate them a little more higher than what you have been doing in the last 2 decades. for you to be enabled to induce them to continue writing checks. So you might lower the headline coupon rate. Your cost of money will go up because fewer guys will write checks. And look at what's happening around you. HDFC Bank is inducing people to put in deposits by offering higher rates. SBI is the elephant in the room. It commands more than almost 2/3 of all banking in India. It's offering a good coupon rate. The fourth largest bank, if my memory serves me right, is Bank of Baroda. It's offering you a higher coupon rate. So why is that happening? Because the check writer is not writing a check. And why isn't he writing a check? On 1st of October 2021, history was made in India. The RBI commissioned a portal called the Retail Direct GSEC portal.
Yeah, correct.
It takes you less than half an hour to open an account, okay? Deploy money in government bonds, directly buying and selling to and from banks without any commission, any brokerage or any GST. And guess what? The sovereign bonds are guaranteed by the notional guardian of the wealth, is the President of India. So I may not have the pleasure and privilege of shaking hands with the Honorable President of India, but she's looking after my money. 100% of my capital is guaranteed, including return and return of capital. What do I get in a bank? A 5 lakh rupee guarantee.
That's
irrespective
correct.
of the amount that I put in the bank. Now, what happens, God forbid, if something happens to the bank? Can a bank print currency? It can't. Can the central government print currency? Yes, it can. So my return of capital is guaranteed by the President of India, and I'm getting 6.7% there. Why would I want to write out a check to a bank?
That is correct. I think that measure to open up the GSEC market tail was truly a masterstroke and unprecedented in its scale, I would say. Right?
Yes, that's what I said. History was made.
Yeah. No, these are some great thoughts, and that brings me to my next question, which is, given your outlook on interest rates and gold, are there any favorite asset classes that you would want to park your money in going forward?
Well, Akshay, I'm of the opinion, not a very popular one, of course, is that I'm expecting pro-cyclicality anytime from 2025. I can't put a date to it. I don't know whether it'll happen on 1st of January 2025 or 31st December 2025, or whether it'll occur in 2025 or maybe even slightly later. But pro-cyclicality is an economic phenomenon when asset prices will move in sync with the economy. The opposite is counter-cyclicality, where the economy is going this way, the asset prices are going this way.
Understood.
So from 2020, especially after the lockdowns, you had factories and offices which are shut, but those listed companies' stock prices were going up. That was counter-cyclicality. Now that is going to get reversed and go into pro-cyclicality, where there will be mean reversion. Now, in this mean reversion, I think, now this is a personal bias, of course, I think silver is a dark horse. You can't make EVs without putting silver in them, in the electric transmission. You can't have a 5G cellular phone or a 5G signaling switching system without putting silver in it. You can't make photovoltaic cells for solar energy without putting silver in it, right? Silver is an extremely good conductor of electricity, so it's increasingly being replacing gold in the electronics industry.
Correct.
So it's an asset which is both industrial and precious in nature. The only downside, the statistical beta or volatility is approximately 28 to 30% higher than gold. So if you have a strong heart, if you're not really taking any blood pressure tablets, then I think silver would be a good bet.
Yeah, I think silver as an asset has been peppered with humongous bouts of volatility for I don't know how many years. It's always been like that. I remember, the Hunt Brothers high that was made in the 70s. And then sometime in, I think, 2012, the market went to that $50 high and everyone, I mean, if you were looking at, let's say, a chart with 30 years years, you wouldn't even know what the relevance of $50, was.
Oh
Because,
my God,
I mean,
yes,
if you look
yes.
at a daily chart, you don't go back like 50 years, right? But it's just, that's the nature of the beast.
Oh yes, I mean, Akshay, I used to have an office till last year in Zaveri Bazaar, which we didn't use for many, many years.
I see.
But as a matter of routine, I would go down and chit chat with some of these Mumbai Bullion Merchants Association members, because we used to have an office there for almost 50 years. So I would sit in their shops and ask them, "What do you think? What's happening here?" Because it helped me during my commodity show on 18R, right? I saw a very strange sight. A guy walks into the shop with a cloth bag full of cash.
Mm-hmm.
Okay, and he empties that bag on the counter, and he says, "I want some silver. I'm not asking you what rate you'll sell me at, but just give me some silver."
Oh,
So
wow,
the
that's
shop owner
interesting.
said, "Look, yeah." So the shop owner said, "Boss, it's shutdown time. We're just counting all our money and taking inventory. Come tomorrow."
Hmm.
This guy was in such a panic mode that he thought tomorrow silver would either not be available or maybe go up 10%. He jumped across the counter, caught the shop owner by the collar, and he said, "Give me silver now."
And he didn't care about the price.
He didn't care about the price. He said, "I'm not asking you the price. You quote your price. Here's the cash. I want silver." That was the kind of frenzy. Will that happen
Straight
again?
out of a movie. I mean, this sounds like.
Yes, yes, yes. It was, and I can tell you the date. It was early April 2011. Early
Yeah,
April 2000.
yeah.
I think that
No,
will happen again.
in fact, my next question was going to be on gold and silver, but I can see that you've made a very strong case for silver because of all of the macros that you quoted, right? I mean, we've heard of these things over and over again as to why, these are some of the reasons why silver over the long term should do very well compared to where it is now. Which is why, I mean, I know people also call it poor man's gold, but hey, whatever flies, right? As long as you make money and take it back, well, I'm okay to own anything, is how I'd put
Yes,
it.
of course. Yes, yes, of course. Yes.
Sticking with gold and silver, Vijay, do you think, if we get that second wave of inflation, we don't know if we will. It's still, a debate. But if we do get, that inflationary problem, sprouting out again, do you think gold and silver will benefit from that sort of a trend?
Tremendously,
Hmm.
tremendously. People will need a cave to hide. And if my theory of pro-cyclicality is correct, and I'm obviously biased that it is, my belief says it is correct. It's been 4 years of counter-cyclical market. So if you're going to see returns from other financial assets, paper assets come down a little, you'll need to reallocate your portfolio. You'll need to take
Hmm.
money out of elsewhere and put it somewhere else, right? So gold is called God's own currency for a reason. It stood
Correct.
the test of time for 3,000 years, both as a store of value and as an asset of alpha, generating pure absolute returns. The more
Hmm.
the inflation, the more gold has rewarded investors, which is why central bankers are loading up on gold like there's no tomorrow.
Yeah, that's correct. Uh, one of the things I have heard you use a lot, and so have most of our viewers here, is this word called shrinkflation, right? Can you please explain to us what you mean by that?
So, Akshay, I tend to be an old school, old fashioned guy who looks at inflation numbers in a very conventional manner.
Hmm.
Up to 6 months before the COVID lockdowns, I would carry shopping bags with my wife and accompany her to the vegetable market at Nana Chowk.
Sure.
And as she went around buying vegetables, I would take out my pocket diary and note down the prices of 16 vegetables, six fruits, eggs, meats, and milk. And every week I would put it up on social media. This is the price of so and so fruits, vegetables, etc. And I had records for almost 5 or 6 years from the time I used to write these weekly articles in DNA Money.
I have to say, Vijay, that's exactly what my father did for many, many years. Now he's given up.
Okay.
He's probably run out of pages in his diary, but
Okay. So I think I go to shops nowadays. I don't go to the vegetable market because the fruit and vegetable vendors have started delivering stuff online if you just WhatsApp
correct,
them
correct,
what you want, right?
correct.
So I go to the friendly neighborhood bania shops or supermarkets and all in my area, and I start looking at the manufacturing date on the product. Is it selling quickly or is it on the shelf for 6, 8, 12 months, right? Is the price higher than what it was last time around when I came a week ago? And the more important thing is the grammage, which is the weight
Mm.
of the product the same? Now, approximately 10 days ago, correct me if I'm wrong about the time, I think it was a week or 10 days ago, Hindustan Lever announced a two-pronged strategy.
Yeah, correct.
Across their more popular FMCG products, they increase the price by a ballpark 5%.
Mm.
And at the same time, they reduce the grammage by 5%. What is grammage? So earlier, if it was 100 grams, they're telling you now the unit size will be 95 grams.
Mm.
Right? So what has happened is you're paying 5% more and you're getting 5% less of the same product. So your inflation actually is 10%. So 5% is inflation and 5% is shrinkflation. What you're getting, what you're paying for, the size has shrunk. Now, I've asked many people, and I've experienced this myself. When I go out to eat in a restaurant, earlier, in any reasonably okay restaurant, one serving of any vegetable or anything used to be enough for two people. Right? Now it's not. Maybe the menu rates are the same, but the serving size has come down. Now, when your
Yeah.
serving size comes down, even though the menu rate is the same, the rack rate is the same, this is pure and simple shrinkflation. This is shrinking of the unit size. Maybe the guy doesn't want to raise prices and put off customers, but at the same time, he's making money.
Yeah, I think it's very psychological, right, Vijay? You walk into a restaurant, you see something selling for 100, and then a month goes by. You've read about how the RBI, for example, raised rates, and how people are talking about inflation. You go back to the restaurant exactly a month later, and you see that the dish is still priced at $100, but the portion size has reduced, but it still leaves a good taste in your mouth because you see that you think you're not paying anything extra out of your pocket, but you just don't know that you are. It's implicit, right?
Exactly, man. Absolutely.
Yeah. No, that's interesting. We've spoken about inflation, and this week has been interesting from a central banking perspective, because I think the Bank of England slashed its benchmark rate by about 50 basis points in the first half of this week. I think the ECB also moved lower. Uh, is this a trend? Do you think there is a chance that all of those people who are thinking a second wave of inflation is around the corner are wrong, and therefore what you should see in 2025 is a spree of central banks just cutting rates left, right, and center? Do you subscribe to that theory? And is there merit in doing so? Do you see anything macro wise that convinces you that yes, maybe the Fed has got it right this time? They need to start being more aggressive on the downside.
Well, Akshay, you put me in a quandary. This is an answer I don't know how to answer, so I'll be myself and be very, very blunt.
Yes.
I don't know any other way. I don't know whether when I go out for my morning and evening walk, whether people are going to be pissed off with me. But I think these central bankers who are cutting interest rates are running like headless chicken.
Hmm.
They are trying to placate an average guy by cutting interest rates and trying to stimulate the economy as they have been taught in textbooks in school and college.
Correct. Correct.
They are unfortunately pissing off the check writer. And if he
Hmm.
stops writing checks, you have a liquidity crunch.
Correct.
I wouldn't call it a crunch. I think if push comes to shove, you'll have a liquidity shock. Can
Yeah.
an average central banker print any more currency without triggering off hyperinflation? You can't do that. right?
Mm.
So what you are doing is going to the bond market and telling a check writer, listen, write out a few checks and buy these bonds.
Mm.
Okay. Now, this guy, you've been shafting since 9/11 by giving him lower and lower rates. Now it's his time after a long, long number of years. He says, I'm not writing a check. You give me the rate I want, or I'm not writing a check. You've seen the number of times bonds have been offered and they go unsubscribed.
Absolutely. That's
What is
basically check writers saying we don't want to write checks, right?
Yeah, the check writer is saying it's my money. I'm not writing the check.
Yeah.
So I think central bankers who are cutting rates are risking at some point in the very near future of going back and trying to placate the check writer and saying, listen, we erred. We are willing to give you higher rates. Please write a check. Or
Yeah.
risk printing more currency and have people out on the streets with red flags.
Yeah. And I think liquidity is the ultimate grease, right? I mean, we all know what happens when markets become illiquid. So that remains the big risk if check writers just put their hands up and say, we're not going to sign off on any checks.
Exactly. I mean, for every debit, there has to be a credit.
As
A
simple as that.
disclosure here. A disclosure here. I am a check writer. I might be biased in favor of check writers, but the way I look at it, if I'm saving money and putting it somewhere, the vehicle that I'm putting money into, like say a 10-year sovereign bond, it goes to fund somebody. So I need the guy who's borrowing this money as much as he needs me to lend
Correct.
this money, right? So we need each other. We need to coexist. You can't really subdue one party and expect the other guy to keep doing what he's doing. So you might reduce the headline coupon rate, but your cost of funds will go down. The check writer stops writing money, your cost of funds will go down. So look at what the banks are doing. The headline coupon rate goes, it's lowered, but what's lowered is the PLR, the prime lending rate. Is everyone a AAA plus prime lending rate customer? No. So he doesn't
Mm.
really get money at PLR. So when he goes to borrow money from the bank, he's not really getting it at the headline rate. Then there are documentation charges, loan processing fees. Then you have, application fee, legal fees, etc., etc. What's that? These are all cost of funds. This adds to my borrowing cost. So you might subdue the rate for the newspaper headlines, but cost of funds is going to go up if the check writer stop writing checks.
No, I fully concur, Vijay. Some amazing thoughts there, and I'm biased because I have similar thoughts, so it feels nice. Uh, let's talk about central banks starting to diversify into things that they haven't really been fans of for a long time until now, such as digital currencies. So my next question to you is: do these new instruments uh, have a future from a central banking perspective? And a longer term future at that. What are your thoughts on that?
Akshay, up to 2 years ago, I would have resisted the thought of CBDCs, central bank digital currencies. Now I think I'm getting to a point where I think it is almost an inevitability. The reason being, look at what's happening. I mean, I go down below my house. I buy a few hundred rupees worth of fruits from a roadside fruit vendor, and I'm making payments on GPay, right, on my mobile wallets. Accepting digital payments has become a way of life. An auto rickshaw wala, a taxi wala, they're all taking GPay. They're all taking
Absolutely.
digital money. So it's cost effective because you don't have to print currencies, you don't have to maintain the soiled currency notes, etc., etc. So to that extent, yes, digital currency will at some point in time become a way of life. But I have, like I said, being somewhat very, very conservative. Think of your oldest uncle you have living in a non-metro city, how conservative he is. I'm probably a little more conservative than that, maybe.
Understood.
I have a concern about, the currency note has a serial number.
Yeah.
I will never know how many notes are printed, but I will have the luxury of time on my side. Go to the RBI website, rbi.gov.in, and say, okay, what is the cash in circulation in the Indian economy? Okay, the RBI tells us how many currency notes are printed and in the system.
Yes.
What if a Nigeria, what if a Kenya or a Uganda says, okay, we've run out of money. The public needs money. Let's mint a few million more in naira or dollars or the Zimbabwe dollars and give it to the people and let them go out there and have fun. You could basically start triggering inflation again
Yeah,
if
correct.
there is no checks and balance into the CBDCs. So we'll have to be very, very careful there. Inevitable, yes, probably. But is it something that comes risk free? I don't think so.
Yeah, I mean, I like the idea. Whether it is here to stay is another, discussion altogether. Let's talk a little bit about another theme that seems to be doing the rounds these days, particularly with Trump ready to, take oath for a second time, and that is de-dollarization, right? Is there a possibility, and if yes, what could be the global impact of that?
So, Shay, de-dollarization would mean going off the dollar and adopting an alternate invoicing currency, for the want of a better word. You
Yeah,
do business in the global market, you buy and sell, and you have to settle these bills by using some mode of payment. So currently, the largest, biggest market share in the global commodities and current export import market is the dollar.
correct.
While it is true that every 250 or 300 years, empires and countries are relegated from number one to number five, number 10 position and whatnot.
Maybe even extinction.
Look at it. Yeah, maybe even extension. So the US is not yet there. I don't
Hmm,
think the dollar has reached a point where you can say, okay, tomorrow we're going to take something else, no more dollar, right? Sure, it's losing market share. So, if my memory serves me right, approximately 7 or 8 years ago, it was 70% plus as global reserve currency.
correct.
And now it is in the upper 50s,
That's
50%.
correct.
Upper 50, 56, 57%. I don't have the exact number with me right now. So from there to go to 5 or 10 or 15%, it's not happening overnight. Let's take a case in point. In 2023, you had Javier Milei, a libertarian economist in Argentina, campaigning for elections. In his very, very unique style, brandishing a chainsaw in the
Very,
streets.
very cowboyish, if you ask me.
Extremely, extremely, and extreme language and 4 and 5 letter words in television, media interviews, etc. And he said, the first thing I will do when I come to power is scrap the peso as a
Yeah,
currency
correct.
and
Yeah.
adopt the dollar. Right? I remember that. I remember
Yes.
writing about it in a couple of media articles that I write guest columns for. What was the first thing he came to power and said within 72 hours? Hey, not possible. I can't do it.
Yeah.
Right? And it's been over a year. Now, I will admit, initially I was very, very skeptical about what this gentleman can or cannot achieve. He seems to have made headway, but now he's telling the public, listen, the peso is not as bad as you thought it was. Let's
Yeah.
not go to that.
But I
It's
think,
not
I mean,
easy.
one of the things I read is, so I was reading about what's happened in Argentina over the last 1 year, and I think the proof of the pudding is in the eating. I think it's really risen from the brink, if you ask me. Who would have
Yes,
thought?
yes, it has. It surprised me at least. I will immediately agree.
Same,
I
same.
was surprised. But still, the dollar has not been adopted. Look at the Greeks.
Yeah, correct.
They said in 2012 you had a huge problem. So Germans were pressurized into bailing out the Greeks, but did the currency change? It's not easy. It's not easy to change the invoicing currency, and you're talking about global currency, not one single nation.
Yeah, that's correct.
Hello, hello. Okay, sure. I'll be online. I'll be on.
Yeah. Are you guys able to hear me now?
Loud and clear, Akshay. Welcome back.
Sorry about that, Vijay. I just had on me. Like, I don't know what happened. But anyways, so I'm doing this on the phone. I don't know how much of that question you heard, but I'll go again, Vijay. So so much happening. Government in Syria got toppled. EU sanction oil, and just so much happening in the Middle East. But are you surprised with where oil has been stuck for the last 3 or 4 months? And do you see anything macro-wise changing that trend from sideways to maybe the market deciding to take some direction?
Akshay, I'm not surprised at all. As a matter of fact, I've written dozens of columns in my guest articles with the media. Number one, Since 2021, I have been debunking the super cycle theory in
Yes.
commodity markets. I don't believe in oil and gas being in a super cycle for the simple reason that if you actually monitor what's happening in oil wells at Kafji, Wafra, you see what's happening in Guyana, you see what's happening in Namibia, you see what's happening in Venezuela. There's new supply coming into the markets, and your demand is not really half as robust. But the other thing which the markets are not looking at, maybe they are not looking at or unable to look at, is the parallel market for commodities. Now, you need
Yes.
human intelligence to monitor this. It's only off late that Bloomberg and Reuters have started writing about it, and I've been talking about it since years. You have unmarked tankers with no transponders, satellite transponders fixed on them for obvious reasons. They don't want to be spotted.
So cannot
You
be
have no,
tracked.
yeah, they cannot be tracked. They are transporting crude oil, which does not exist in the account books. This is called shadow inventory. The crew is without identification papers or passports. Deliveries are given and taken in the high seas, which are out of jurisdiction of any nation's waters. Deliveries are made at night when satellites cannot observe you. And this market has gone up a minimum 300%
No, that's
after the
huge.
Ukraine war has started. After the Ukraine war has started.
So,
So,
Vijay, if I come in there, so these are essentially tankers which don't have, this system that's called AIS, which is used to track where vessels are. That's what you're hinting at, right?
absolutely, Akshay. Many of these vessels are officially scrapped. They shouldn't exist. They are called rust buckets. Rust bucket. And there is a second-hand tanker market which will tell you that this tanker has been scrapped, but is actually sold off in the black market. So the world is a strange place, and a lot of strange things happen.
Yeah. I mean, it's amazing. I mean, that number that you just quoted, 300%, that means that this parallel market is thriving, and how, right?
Absolutely. Absolutely. The Venezuelans do it, the Iranians do it to skirt sanctions, the Russians have been doing it. And since the last 2 quarters or more, Bloomberg and Reuters have also started reporting it very, very open. It's something like
Mhm.
guys like me have been warning for years.
Yes, you have been. I'm testimony to that. Okay, we're doing some great thoughts, Vijay. Thank you. We're doing really well in terms of time. And therefore, it is now uh, time to kind of unravel my cards and really, put you into the den of fire, so to say, with my favorite section, which is the rapid fire round, right? So I'm going to, give you 10 different markets, Vijay. And for each of these markets, you're going to give us three things. First is your view, whether you're bullish or bearish. Second is a probable target for that market. And thirdly, a level below which you will have to reconsider your view as it stands. Okay. So the first market
Okay.
that I want to get your views on is the Nifty. What do you think?
Well, I think pro cyclicality, your rate of return is going to be much, much lower than what it was in 2023, 2024.
Mm-hmm.
So, a very optimistic target, 27,500, and something that I expect to be fairly probable, sub 20,000 on the Nifty spot. I
Oh, wow.
think that would be confirmed if and only if the Nifty starts trading sustainably below 22,200 spot.
Understood. Well, I can tell you it's not a very popular view.
It's not. It's not.
Next, Bank Nifty.
Well, banking and financial sector stocks have 34.25% weightage in the Nifty 50, so
They're
they
the
will
they're
receive
the
a.
elephant in the room. Yeah, yeah.
They're the elephant in the room. The weightage is equal to the next four heavily weighted sectors, so quite well supported on the upside. 60,000 is what the Bank Nifty can go to. I'm talking a spot here. If it falls below 51,000 sustainably, then you could possibly even see 47,000.
I see. Gold.
I'm talking of MCX gold rather than COMEX gold here, Akshay, addressing the Indian audience. So I'm talking about rupees for 10 grams. Upside target for end of 2025, 92,000 rupees for 10 grams. And in a very, very pessimistic scenario, which I don't think is a high probability, 66,000 levels on the downside. Would I sell if I see that price? I'm not selling gold or silver at all.
That has been made amply clear to me through, watching your so many videos where, I mean, like I said before, right, you've been so gung-ho about gold and silver for the longest time, and you've been proven right. So last man standing, I would say. What about crude?
Thank you. WTI crude, Akshay, I think can go to sub $54 a barrel. Now, coming to MCX rates, that would translate to roughly 44 or 4,500, 4,400 to 4,500 on the downside. On the upside, if there's any surprise, any geopolitical event can occur, 6,800, 6,900. But if you give me that price, I'll be happy to sell.
Yeah, my own view, and I'd like to kind of communicate this to our viewers here today. I mean, based on the work that I do, I think 64 for NYMEX crude remains a critical hurdle on the downside. Anything below that, I will not be surprised to see it drop below 50. And the only thing that can negate that view, which I currently fastly, is if crude surprises on the upside and gets past 86. But otherwise, I mean, I will be the last person to be surprised if we have a move below 50 before the super cycle theorists, start ringing alarm bells again. Let's come to silver. You think there is a chance for silver to see $50 in 2025, or is that too much of a stretch?
I think it's a probability that is still open. Now, coming to Indian rupees on the MCX for a kilogram of silver, I think the vicinity of 1,30,000 rupees per kilogram is an open possibility. Worst case scenario, absolutely worst case scenario, anything between 76,500 or 77,000 rupees per kilo. But here again, even if it was to hit there or go lower, I'm not selling.
Understood. I mean, it's really encouraging to see that we are sailing in the same boat, Vijay, because about 3 months ago, our team put out a report on silver. We called it, a flash report, which is like a special thing that we do whenever we think, the market's giving us or our, clients a great opportunity to participate in the coming trend. But we also had targets, in that 1,10,000, 1,20,000 area that you just mentioned. So that's really nice to know. What about copper? I mean, commodities on the whole, we understand that China continues to remain a major player. Copper has done it all this year, right? Rose, I mean, went up exponentially, had a rather nasty downdraft, and now it's really trying to, ask itself where it wants to go next. With everything that's happening in China, how do you think that very, very popular base metal will do in 2025?
Akshay, I would request your permission to give a slightly longer answer than.
Sure, please.
So, Akshay, if you want to trade industrial metals, you cannot ignore Latin America.
Right.
Now, let's take Dr. Copper. Dr. Copper, or the tin roof of the economy, it goes in every industrial sector. 40% of the global copper in the world comes from two countries, Chile and Peru.
Yeah.
Of course, there are others. But Latin America is the global supplier of natural resources, particularly metals.
Yeah.
Most of these countries are up to here in dollar-denominated debt. They are struggling to repay their foreign loans. They are buckling under interest payments in dollar-denominated debts. Their currencies are volatile and falling. The Brazilian currency just plumbed lows last week. What do you think these nations will need to do if they don't want to declare bankruptcy or default? Continue to sell natural resources from the ground. So any talk of a super cycle in industrial metals is at the risk of ignoring Latin America. These are
Which cannot be done.
Yeah, many of these are corrupt countries. They are highly poverty-ridden. political instability, processions on the streets, people coming out and pelting stones is a everyday phenomena in many countries. So I think the super cycle theory in copper is kite flying. As far as the levels are concerned on the MCX in rupees per kilogram, I think 880, give or take 10, 15 rupees here and there on the upside. And if it was to fall below 775 rupees per kilogram, it could actually go to 740, if not slightly lower.
No, it's interesting you mentioned this because, yes, these countries in LATAM are heavily debt ridden. And if the dollar gets a bid because of Trump or whatever, one can conjure up, I think the pressure is only going to escalate, right?
So, Akshay, as a creditor, if your debtor is defaulting, what do? You take charge of the asset.
Absolutely.
So the global financiers will take charge of their mines and start buying their natural resources at deeply discounted rates. So where is the super cycle?
Yeah, it all makes sense. Let's come to interest rates now. India 10-year on the GSEC, 650 or 750?
I would be very happy to start laddering 10-year sovereign bond yields above 7.15 odd levels. In the absolute scenario where bond yields were to fall, I don't see them going below 6.35.
I see. And what kind of an upside are you thinking? Can happen given the current evidence.
Well, Akshay, much would depend on what happens to the USD INR, the Indian rupee peg, and our inflation, etc. That's a wild card. But like I said, I would continue. I love to invest money in sovereign guaranteed schemes because the honorable president is looking after my money. It gives me better sleep at night. All right. So I would be very happy to invest anything above 7.10, 7 point. I'll ladder for every 20 basis points increase in the yield itself.
Understood. That brings me to the rupee. I mean, historically, I think purely on the basis of, interest rate parity, and because the INR has been a higher yielding currency relative to the US dollar, at least for the most part of the last 20, 30 years, I think a 4 to 5% depreciation in the rupee every year is considered normal. If we stick with that theme, do you think 90 in 2025 could be a possibility? Or again, is that a very stretched, and pessimistic rupee sort of target?
Well, Akshay, the long period average, the LPA, is anything between 3.5% to 5%. And there have been years when the rupee has not fallen 3.5% to 5%. Take a look at during the COVID lockdown years. The rupee held its ground for almost 15 months. But what did it do? It caught up and made up for that gap by falling very, very sharply. So I think, yes, 90 could be possible. I would not be surprised at all.
Okay, that brings us to the dollar, the DXY, the dollar index.
I think 99.50 is where I would expect a whole lot of strong support in the absolute scenario on the downside.
That's also Vijay, I think, where the last low was before we saw that vertical surge.
Yes. So on the upside, I would not be surprised if it was to head towards 109, 110.
Okay, that's interesting. Finally, the big brother of them all, something that everyone looks at early hours when our markets are ready to open, and that is US equities, and the S&P 500 is what I want to get your thoughts on.
Well, Akshay, it's in blue sky territory, right? It's at all-time highs. There is no overhead supply coming in from people who are trapped at higher levels, who are coming out to book profits.
Correct.
So it could go anywhere, but on a very, very conservative basis, and I'm being conservative here, 6450, maybe 6500. That's not too very far from here, of course.
Correct.
But should things get ugly, anything happening on the geopolitical front, etc., 5150 to 5200. is what I'd look at. But that's way too low. That's not really a very high probability of it.
Understood. It's interesting, and more so because, like you said, right, blue sky, all-time highs, nobody's panicking. Late buyers are also continuing to do really well because the market just, I think, as we speak, if I remember my numbers correctly, it just hit its 57th record for the year. I don't know of any other year where you had so many records being made in that single calendar year, right? So it's unprecedented. And clearly, the fate of global equities will hinge a lot on how US markets do. But on that note, you remember sometime, towards the end of September, China had this huge surge where the market, I think, went up 25-30% in a couple of weeks. And then we topped out late September and we saw that downdraft. And initially, people were thinking maybe it's, foreigners withdrawing money from India and investing it into China. I would respectfully disagree because of all that I've seen since then. I think that money is really going into US assets. Would you agree?
Absolutely, absolutely, Akshay. Which is why I think if you've noticed what happened in the last policy announcement of the erstwhile RBI governor, Mr. Shaktikanta Das, what he did was set the ball rolling for attracting money from abroad into India.
Yeah.
Right? He raised the ARR for FCNRB deposits from 300 bips plus the ARR to 500 bips, thereby effectively raising the coupon rates for FCNR deposits. Now, because Trump is expected to make America great again, that's what his slogan is, money is flying back into the US. Now, cash carry trade considerations and to attract money back into India, which is why I say interest rates need to go up and not go down. And I was very, very pleased to read Mr. Neelkant Mishra's interview in the print media where he says coupon rates in India are not falling for another 12 to 14 months. He's from Axis Bank, of course, you know that. So I think I completely agree with you. It wasn't China. It was the US mainland where the money is headed, and we need to fight to keep our funds flowing into our country.
Fantastic. Well, Vijay, this has been an excellent discussion. We're running behind schedule by 5 minutes, but I guess that's okay. Although it spoils the record that technicians are known for their timing, but this one occasion can be pardoned. But thank you so much, Vijay, for spending time with us. I'm sure our viewers have found this interaction as exciting and as knowledgeable as I have. Thank you very much for your time, and we look forward to hosting you again.
Thank you so much, Akshay. The pleasure and privilege was all mine. I wish all your viewers a very, very prosperous 2025. Take care. All the best.
We wish you the same, sir. Thank you very much.
Thank you. Thank you.
Bye-bye.